Hey traders, it's John Fortune here with this week's weekly Forex Forecast. Hope everybody's having a great weekend. We do have US CPI coming up next week. And if we look at the DXY on the monthly chart, I have been saying for a while that it does look like the DXY is trying to find a bottom here. However, going into next week, US dollar shorts are setting up as some of the best plays. And I do think we could get a test of the 100.39, which is this key area of resistance over here, before forming a major bottom in the dollar. Okay, so let's have a quick look at the economic calendar before moving on to the markets themselves. Very quickly, we did have non-farm payrolls coming out and we had quite a strong beat of expectations. However, it's difficult to actually take this at face value because over the last 3 months, as you can see, we have had strong data coming out and then it's just been revised down the following month, and you can see that has happened every single month this year. So I would not be surprised to see this getting revised down again next month, and it also doesn't fit quite in with some of the other data we've been looking at, such as the ISM surveys, which have been showing a deterioration of the jobs market. However, the employment market in the US is still tight. It may not be as tight as being shown by these numbers, especially if they get revised down, but it is still tight, and it does mean Jerome Powell is going to, at the very least, have to keep interest rates where they are. If not, raise them a little bit, maybe 25 basis points once again, if we started to see inflation data picking up or something like that. So that's the first takeaway. I would take this with a pinch of salt, and I would not be surprised to see it revised down again next month, as has been the case every month this year. However, what I think is most important for the dollar in terms of the bigger picture was the ECB. The ECB came out, and yes, they raised 25 basis points, but this was probably the only meeting that the ECB had the chance to out-hawk the Fed. They could have gone 50 basis points, and there were analysts who thought they were going to go 50 basis points, and they didn't. They signaled that they're not going to pause, but then so did the Fed, although they did leave the door open to it in the near future. But this is significant because that failure to out-hawk the Fed, alongside some of the other catalysts we've discussed before, such as the BOJ kicking yield curve control into the long grass for the next year or year and a half, such as the GDP data coming out of the US starting to point towards a safe haven bid for the dollar fundamentally, as a US recession is on the cards. And now what we're seeing is, and it's not just the ECB, we're seeing EU data starting to deteriorate faster than the US data. And what that means is the relative bid is starting to come back into play fundamentally. In other words, the ECB are probably going to blink first, and they're probably going to have to cut first as economic conditions in the EU deteriorate faster than the US. So that in and of itself, not just this, but this hand in hand, and of course the two things are connected, but hand in hand with the deterioration in the EU data, especially German data, this points towards the ECB not just failing to out-hawk the Fed, but probably going to have to cut or ease faster than the Federal Reserve. And again, that is fundamentally bullish for the dollar. Okay, so if we jump ahead to this week very quickly, we have inflation data coming out of the US on Wednesday. So I do like the dollar pairs next week. I will be looking for them before CPI, but just bear in mind, we might see the dollar pairs go nowhere basically into Wednesday and then start to move from Wednesday. And the other thing to pay attention to next week is the interest rate decision out of the UK. So we'll also be looking at pound pairs, but just bear in mind that we have that interest rate decision on Thursday. Okay, so let's have a quick look at the scores going into next week. And the takeaway here from the scorecards is the US dollar moving into the negative or bearish part of the scorecards. It was already in the negative side. It was -1 last week. However, moving into -2, this tells us we have edge going into next week in shorting dollars. Yes, we have CPI, and that can make the market quite volatile, but I do like US dollar shorts heading into next week. And on the other side of that, I do like New Zealand dollar long plays on a relative basis because we've seen a significant net change. And when we see this very often, the New Zealand continues up in the scorecards when you get this kind of significant change. So what I think we're likely to see next week is I think we're likely to see a continued weakening of the dollar, possibly into that major resistance area we looked at in the monthly chart at the beginning of the video. And as that takes place, we're likely to see the commodity currencies especially the Canadian dollar and the New Zealand, and I'm going to highlight these two to the upside next week. We'll see why. I think we could see a relative outperformance of these, but I also like Euro longs next week as well. And to the downside, I like Aussie shorts and I like yen shorts. But because of the dynamic with the dollar, i.e. we get a weakening of the dollar, I do think yen shorts next week will actually be a better play than the Aussie, because although this is bearish and we should be looking at shorts, we may get a little bit of support under the Aussie because it's a very risk-on currency if we start to get a weakening in the US dollar, as looks likely next week. And the other thing to note is the Swiss franc, although it is in the positive side of the scorecards and it is actually number one, you have to remember the direction of travel. Last week this came off of +4 for the first time. That signals a near-term top is most likely on the cards in the Swiss franc. And actually I covered half of a bigger Swiss franc long play. It was CAD franc to the downside, which I shorted back in March, shared with GMT members at the time we were looking at. And I did cover that position on the basis of the Swiss franc going from 4 down to about 3.5 in last week's video. We had that sign from the scorecards, and it says, what it says is, if you're long Swiss francs, look at booking profits, covering your long positions. That's what it means when we come off of oversold for the first time, or in this case, overbought for the first time. So that's the other thing to remember, and it's why going into this week, I do not have, despite this being number one, I do not have Swiss franc longs high up on my list next week. Okay, so let's have a look at the individual currencies before moving on to the best markets that are on my watch list next week here in the majors. Starting with the dollar, we do have only a short way to go to this 139 area, and this was the high in the monthly that I highlighted at the beginning of the video that we broke out of, had the big rally, and now we're kind of correcting back towards. So I would not be surprised to see this, and in fact I expect this to come down next week, take out this level. And remember, this is such a big pattern and a resistance area from such a significant point on a monthly time frame that you could very easily see the daily kind of chopping below here, testing the 100 level, and maybe even going a little bit lower. That would not be surprising. In fact, I would almost expect that, because with such a massive monthly level, you know, you're unlikely to get a small wick, you know, just on the daily and do this, because the monthly candle needs to go down through it and then pull back. So I do think we could go down below the 139, and I think this downside is the most likely play heading into next week. And once we come down and test this, I do think in this area we are in the process, although the scorecards are telling us not yet. In fact, the scorecards are telling us still to be short. But we are in the process overall, based on some of those fundamental reasons we listed earlier. I do think we're in a bottoming process, and yes, this could come down and chop, and it could even break the 100 level, but in this area I do think downside is limited. So I do like the shorts. Whether this happens before CPI or after remains to be seen. We could even see the dollar testing this level and reversing on CPI. That could be another thing. So I am going to, because CPI is right in the middle of Wednesday, I am going to be looking for these shorts before Wednesday. But just bear in mind, we may see the dollar just kind of consolidating into CPI, in which case it becomes a news event trade, right? You can wait for the move off of CPI and then trade the follow through. Next is the euro. Now this is just the inverse to what we're looking at in the dollar, and you can see here, perhaps because this is to the upside, that we are really lacking momentum. I mean, we have broken this high. Yes, we are pushing through it. Yes, we could push through it a bit more, maybe even test this high over here. However, we are running out of steam technically. We are not seeing these kind of explosive moves over here, for example, which are indicative of further advances. So I would not be surprised to see this pushing higher, and we could even test the 1.12155, and I do think this is the opportunity I'd be interested in, you know, further advance to the upside next week. But just bear in mind, this is a very short-term move in my opinion. And I do think this quarter, in fact, and you know, we're coming up to halfway through this quarter in a couple of weeks, I do think this quarter the dollar has a very good chance of putting in that overall bottom. But again, as I said, not yet is the message from the scorecards. Next is the pound. Now the pound is actually showing the most strength here, breaking through, and this is not surprising because in the scorecards this has been highlighted as the most likely outcome. The pound was projected to outperform, and you can see, you know, the other markets, it's been actually in the positive side of the scorecards for a bit, and you can see it has actually performed exactly as projected. And I do think yes, we are pushing higher, but again, you know, I think we'll probably push higher again next week. But I do think, again, upside is limited overall. We've had a huge rally from the lows at the 1.04. And I do think somewhere in this area over the next few weeks, we are going to, and probably, you know, as the DXY tags that 100.39 area or even the 100 area, I do think that is probably going to spell the downside or the turning point in the pound. Next is US dollar Swiss franc. This has been one of my favorite markets to the upside all year, and this was one of the currencies which I took, or one of the position trades that I actually took. The bigger, you know, multi-month trades was in the Swiss franc to the upside. And we got the signal last week. Last Saturday, I pointed out, and bear in mind the Swiss franc, and I want to show you this because this is why the scorecards act as a leading indicator 1 to 4 weeks out. They're not lagging. They're not like a MACD or an RSI. They kind of look back on price. This is looking forwards and projecting, look, what's the most likely outcome near term, 1 to 4 weeks. And last week I said to you guys, this was pointing towards a top in the Swiss franc. And last week we did come up, we tested the high and we failed. And the risk is for a continued pullback in the Swiss franc. Now, just to be clear, I am expecting further advances overall, hence why I only closed out 50% of my franc long position, which we captured back in somewhere down in this area. And it was CAD franc to the downside, Aussie franc to the downside were the two shorts I took. And this pullback here, you know, is it going to be sideways? Is it going to do this? Because when you have that near-term top projected, it can do this or it can do this. So I wouldn't go out and short Swiss francs. That's absolutely not what I'm saying, nor is that what the scorecards are suggesting. The scorecards are suggesting if you're long, you should be booking profits because a correction or a pause is likely. So I'm really off Swiss franc next week because I don't want to be long based on what the scorecards are saying because they tend us to book profits. And I don't want to be short because there is the risk of a re-acceleration in this currency to the upside. So the way I see it, the money has been made over this previous run here so far. It needs a breather, and then we can look at jumping back on this to the upside in future weeks. Next is the yen. I do think the yen is setting up as one of the best shorts for the rest of the year, as long as we don't get, you know, a global recession and a market crash, because then we will see a flight to safety in the yen. I do think that the yen is likely coming down to the lows, and this was essentially given the green light, this move, by the BOJ kicking yield curve control or their adjustments of yield curve control down the road by a year to a year and a half. Now, some people are saying they're doing that because they're going to surprise perhaps intermeeting. And that is a possibility because they wouldn't necessarily want to telegraph what they're going to do with yield curve control. However, I don't find that likely based on the inflation data out of Japan and the fact that we are heading in towards a global slowdown. And all of that is likely going to be, you know, deflationary, and therefore for the yen, that is actually going to see the yen appreciate in value, which is deflationary for Japan. So why would they want to add fuel to the fire when they're already struggling and they don't project CPI to remain over 2%, which is their target? If that's the case, why would they go on to, you know, adjust yield curve control and add to the deflationary pressures on the yen, you know, moving higher when they're already, in their own words, going to struggle to keep CPI above 2%. So I do think what they're saying is most likely true. There is a risk they surprise intermeeting, but I think it's actually unlikely based on the data. So I am focused on this, and I do think yen shorts next week are definitely going to be something to keep an eye on. Next is the Canadian dollar, and we've been looking at this as a big bear flag, and we've been umming and ahhing, you know, is the CAD actually going to come back and test this? It looked like it wasn't, then it looked like it was, then it looked like it wasn't. Last week we did have, we've just seen in crude oil a kind of steep sell-off, almost capitulation, near-term move, and this has added to the strength in the Canadian dollar, and I do think now that we are going to finally come up and test this for a big A, B, and a C. And I think this also, once we come up and test this high over here, this big correction for this kind of bear flag here, I think somewhere up in this area, and I, again, would expect it to maybe break through, you know, a little bit, but somewhere up in this area, I think this is going to coincide with that potential bottom in the dollar. So keep an eye out on this. This move near term to the upside though is, I think we're going to see that, if the dollar weakens, we do see the Canadian dollar coming up to this area here, testing this high. And that's why I like US dollar CAD to the downside as a trade next week, based on what we're seeing in scorecards as well. And also CAD yen is something I'm going to be keeping my eye on to the upside next week. Next is the Aussie. Now the Aussie broke down, and I was looking at this initially as a one wave and a two wave, and that may still be the case from this consolidation. However, we failed to take out the low, and what this now looks like is this looks like it's coming back up to the highs for a much larger corrective move. This is not yet something we should really be considering as a reversal, because you would really want to see this come down and double bottom, or come down, bounce and then form an inverse head and shoulders for this to be really a technical reversal pattern. So as it stands, it looks like this is most likely just forming a larger correctional consolidation up into the highs over here. And again, that would coincide with a push higher, the dollar coming down a little bit more, and then again up in this area, rolling over and starting that next leg down. As we've been discussing, I am looking for the Aussie to come all the way down to these levels. And finally, New Zealand dollar. We also see exactly the same thing in New Zealand dollar. And I have been saying all the way over in this area, I'm looking for the New Zealand dollar to come down, but the market doesn't necessarily move in a straight line. And we've had this break lower. And again, just like Aussie dollar, just like US dollar CAD, I do think we've got more upside here, and I do think we take out this high. Now, one thing we will need to pay attention to is how price behaves around these levels, because if we start to break with momentum, we start to break all these levels in multiple markets, that actually would be a very bearish sign for the dollar. But as it stands, I do think on balance, we come up, we test the high, and up in this area somewhere, we do actually start to roll over. So the important takeaway here is, yes, I do still have fundamentally a bullish bias on the dollar. I do think we head higher this year. However, short-term trading and fundamental outlook are not always going to align. As it stands going into next week, it does look like, this kind of outperformance or underperformance of the dollar is the most likely scenario next week. Okay, so let's have a look at the markets on my watch list, starting with crude oil. We look at crude oil every single week. I do not have a strong bias on crude oil. However, I do favor shorts only. And there's one of two things I'm looking for next week. I'm looking for continued correction, as always. And if you're looking to trade this intra-week, I'd be looking for a breakdown in crude oil down towards the 67 area. Now, the second thing I'm looking for is if we just pull back and we consolidate and we do not get the break, if we just continue to consolidate and the trend stays intact, if we trade into the 75 area, this is another place where I'd be looking for a short-term trade in crude oil next week. Okay, so the first market we're going to look at here is euro dollar. Now, I do like euro dollar for further upside. What I'd like to see is we are pulling back, so any consolidation in this market is viewed as an opportunity to look for bullish setups into the 1.1150 area. Now, just bear in mind, with the dollar pairs, we do have CPI on Wednesday, which is right in the middle of the week. So if we just consolidate, I would like to see these go before Wednesday, but if we just consolidate into Wednesday, look for the breakout post CPI and then a follow-through trade to the upside. And that would, of course, be on dollar weakness post CPI. Next is New Zealand dollar. Now, on balance, I probably prefer New Zealand dollar, US dollar CAD over euro dollar. Why? Because if we get that underperformance of the dollar, often you will see the more risk-on currencies benefiting, those commodity currencies. So yes, the euro is 57% of the dollar index. And I do think, as we underperform in the DXY, euro dollar pushes higher. But I actually like New Zealand dollar, US dollar CAD a little bit more, to be honest with you. So any pullback in this market, and we do have some nice momentum, unlike euro dollar, which is a little bit choppy, any pullback is viewed as an opportunity to look for longs. And again, maybe it consolidates and breaks after CPI, but I'm only looking for longs into the 0.6380. And this high over here is where I think we're coming to in New Zealand dollar. Next is US dollar CAD. Now, after New Zealand dollar, this is probably my second favorite, and then euro dollar third favorite. We do have a head and shoulders reversal over in this area, as you can see, and we have big momentum to the downside, and we have a max profit taking area right at the previous low. So I really like this setup next week, but I'm not going to be shorting it here. So any pullback is the opportunity next week to start to look for bearish setups. And again, maybe we consolidate into CPI and then break, but I'm going to be looking only for shorts down to the 1.33 area. And the final dollar pair we're looking at here, we're going to look at the silver and gold markets, obviously, but the final Forex market we're looking at here with a dollar in it is US dollar yen. Now, why is this highlighted in blue? Because this is a plan B currency pair. What it means is I'm not really interested in trading US dollar yen because I'm looking for dollar shorts. So euro dollar up, New Zealand dollar up, US dollar CAD down. But if that fails to materialize, it's always nice to have something to be reactive to. So say we just consolidate into CPI, and then for whatever reason, we get a really strong rally off of the CPI print in the dollar. You know, maybe we get a very hot inflation report. It causes the dollar to rally. Well, in that case, I would not go in and be looking for short dollars. I would be looking for long dollars. So any breakout in US dollar yen to the upside, this would be the market I'd be looking to trade, you know, reactively as a plan B up towards the 136.50. So just to recap, I favor euro dollar to the upside, New Zealand dollar to the upside, US dollar CAD to the downside, and these two are my two favorite going into next week. But if we get unexpected surprise against that plan on the CPI and we get a stronger dollar, I'd like to go long US dollars versus the yen reactively. Okay, so that leads us nicely onto the yen pairs. I do prefer dollar shorts, but I also like yen shorts. We've already started to consolidate and pull back. So going into next week, any continued pullback is viewed simply as an opportunity to look for bullish breakouts in this market into the 151 area. Next is New Zealand yen, and again, don't be surprised to see New Zealand yen and CAD yen outperform euro yen because of the risk on nature of those. So as you know, the DXY sells off as looks likely, you know, we get that outperformance of the commodities over and above these kind of G10 majors, you know, the euro, pound, etc. So any pullback in this market next week is simply an opportunity to look for long positions and long breakouts up towards the 86.25 area. And the final yen pair here is CAD yen. Now CAD yen has already started to break out from this correction. So any pullback, I'm just treating this as a bull flag next week, and I'm going to be looking for bullish setups into the 102.50 area. And the final Forex pairs I like here are the pound pairs. Now the pound is one of the better scoring currencies. However, we have that risk event, and there is an outside chance the pound pairs do nothing into Thursday. So just bear that in mind. It's why they're slightly down on my list this week. However, what I'm looking for here is any continued pullback in pound Aussie. This is viewed as an opportunity to look for bullish breakouts into the 1.8950 area. Next is pound dollar. Now again, bear in mind, although pound Aussie is up here at the top because it's the weakest, I do think pound dollar and pound yen could actually be better markets next week because there may be some support under the Aussie if the DXY outperforms. And you can see the price action is also nice. So we're actually breaking out of this. We failed once, twice, you know, and then we broke higher. So any pullback in this market is viewed, you have a little bit of an ascending triangle pattern here, is viewed as an opportunity to look for bullish breakouts into the 1.2750 area. And the final pound pair I like here to the upside, so pound strength, is pound yen. And again, pound dollar and pound yen, I would look for these before Thursday because, you know, the pound interest rate decision or the UK interest rate decision is so far out in the week on Thursday that you could very easily get these moves before it happens. So if you can get them and then be out for the interest rate decision, that would be perfect. But just bear in mind, sometimes you will see these just correcting into Thursday. But any pullback, and I will be looking for this before Thursday, is going to be viewed as an opportunity to look for long setups. And I'm going to be looking up towards the previous high here at the 172.50 area. And the final pound pair here is pound New Zealand. Now, like US dollar yen, this is simply a plan B currency pair. And what I'd like to see is if we started to pull back and then maybe we just correct and then we get the sell-off on Thursday on the interest rate decision, we get a weak pound, this is going to be the opportunity to look for a pullback and shorts in the pound down towards the 1.9850. So if we get a weak pound unexpectedly against the initial plan from the interest rate decision on Thursday, that would be the opportunity. I'd like to go and short the pound in that case. If the setup is there and we get that really nice sell-off, I'd like to go and short it against the New Zealand dollar. I think that is the market that I'd like to pivot to in that plan B scenario. Okay, so wrapping up the video with gold, silver, and Bitcoin, you can see with the gold-silver ratio, we are starting to consolidate sideways and break down somewhat. So I have been favoring silver to the upside over gold. And next week, I do like both of these to the upside. I think we go back and retest the highs. However, I prefer still silver longs over gold longs. Next is gold. Now, if we look at gold, here's the interesting thing. If I zoom out here on the daily, you can see we tested the major high from the August 20 rally. So obviously 2020, that's the year. So August 2020, we rallied, we formed the high. We then formed a big A, B, and a C. And we're actually at an area where either we potentially double top for a bigger reversal. I don't think it would be anything huge, you know, maybe a pullback into the 1800, maybe even, you know, a bit further down 17. But I think downside is probably limited in gold somewhat, even if the dollar does rally and bottom, just because of the nature of it and also the inflationary problem that we currently still have globally. So I'm not convinced we get a major sell-off in gold, but I do think, especially as we get a bottom in the dollar, I do think we could be forming a near-term top here in gold. However, for next week, absolutely near-term, I do think we could rally once again into the highs, and then perhaps that spells the end of this recent run in gold and we get a bigger correction from the high. That would be in the scenario where the dollar bottoms. Of course, if the dollar doesn't bottom and the dollar actually sells off even more, then you could see this breaking out to the upside. But I do think gold upside is limited now, although I am looking for it next week as a short-term play. Next is silver. Last week we did come up right into the target highlighted. Going into this week, once again, I do think, and we're looking in the daily here, but I do think we pull back and we retest these highs and potentially onto the 26.6 area in silver. But either way, both gold and silver, just as I believe that the DXY is likely to find a bottom somewhere around the 100 area, I do think that these will also find near-term tops as a stronger dollar becomes a headwind for both of these markets. And last but not least, we have Bitcoin. On balance, I do favor Bitcoin long, so any pullback would be viewed as an opportunity to look for long positions into the 31,000 area. And again, I do think as the dollar bottoms and we start to see some risk off and even stocks top out over the next quarter or so, I do think we start to see Bitcoin rolling over as well. So that is it for me for this week, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the room each day where I go through these markets and the setups that I'm personally looking at with members on a daily basis for over 75 markets in different asset classes, including stocks, bonds, Forex, and commodities. So if you'd like to know more about the benefits of GMT membership, why not check out the link in the description below and in the pinned comment where you can get a 2-week free trial totally risk-free. So have a fantastic weekend. I'll see you all next week.